All right, so we're live on YouTube. So hey, what's going on, everybody? Welcome back to the YouTube channel. I'm your host, San Capizzi, here at CryptoSomniac, where the markets never sleep. I'm your host. Today we're going to talk about Bitcoin futures and the impact they are going to have, and just a little bit more about what they are. And in fact, I definitely recommend you head over to my website, cryptosomniac.com. If you want to know a little bit more about futures, I go into depth about what they technically are, work from a technical standpoint. Watch that video to recap. I'll quickly recap. So Bitcoin futures will allow people to bet on basically the future price of Bitcoin during a certain length or period of time, say 1 hour out or 1 day out or several weeks, and it gives them a way to gamble on the price and future price of Bitcoin. You aren't actually investing in the underlying asset when you're betting in a futures market. You are simply betting against the price, and someone has to be willing to take the other side of your position. I'm sorry, I'm a little sick here. But someone has to be available to take that other side of the position in the futures. In addition to that, let's talk about who is, accepting Bitcoin futures and where you can get them. So as many of you know, the CME Group, the Chicago Mercantile Exchange, is launching Bitcoin futures on December 18th. However, they are also launching tonight. The CBOE is launching their own version of Bitcoin futures, and in fact these guys are kind of competing with each other to actually launch right here. So December 10th today at 6 p.m. Eastern, they will be available on the Chicago Board of Exchange. I believe this is on at 6 p.m. under the ticker symbol XBT. Like I said, they are allowing you to bet, like I said, against the future price of Bitcoin. And I want to talk about a couple of key points, and I want to pull up a graph that I had made a little bit earlier and explain it and my thoughts on what I think is going to happen to Bitcoin, its price. Hopefully I'm not lagging. Also, if anyone let me know if I'm not, or let me know if I am lagging, and if you have any questions, feel free to let me know. But a couple points about my impact and my thoughts on Bitcoin futures for the market. So for the long term, what this allows basically is for big hedge funds and institutional firms to essentially bet against Bitcoin and short it. Essentially, it's a way to short Bitcoin by betting against it, essentially. And it will be interesting, and I think overall the long-term impact here is, and there's a lot of warranted FUD and uncertainty, I think, right? But the overall long-term impact, like I said, this does not impact the actual technology of Bitcoin. So I think from a long-term impact, it has no direct impact on how Bitcoin functions. However, I guess the long-term impact I think is good, because I think this is for the first time an institution will be able to use a financial instrument such as Bitcoin futures as a derivative to investing in Bitcoin without having to invest in the underlying asset. And I think overall that speaks volumes and good things for Bitcoin for the most part. People, I think, who have been waiting on the sidelines for years and years and years to say, is this Bitcoin thing legitimate? Is this something that they want to invest in? And I think Bitcoin futures is just the beginning. I think this is a good sign, and I think in the long term, we will see other instruments become available next year, ETFs, and in fact, next year, NASDAQ said they will be releasing their own version of Bitcoin futures. I think, like I said, these two exchanges here were competing against each other to kind of be first to market and be that only point in place where people can actually trade Bitcoin futures. They wanted to compete, and like I said, there's two out now. I think there's even talks of another one. Like I said, NASDAQ next year will be allowing Bitcoin futures, and overall it's good. I think you're going to see the development of a lot of other types of financial instruments that become available to traders. Additionally, I think it will, the question comes up a lot, I think, who will be shorting Bitcoin? And I think, like I said, I think in the immediate, what this does is I think it's going to reduce the volatility involved with Bitcoin. I think big hedge firms are going to be able to shorten Bitcoin as a hedge, and at the same time they are going to invest in this underlying asset, and they will have more freedom to do so without such great risk. I think it's going to introduce new people into the market because there is this possibility of shorting the money, and it reduces the volatility. It kind of squeezes this gap here, I think, or it will give the freedom and flexibility of other traders, big hedge firms, to be able to shorten the market and basically reduce the volatility. So I think this is the first step in reducing this volatility in Bitcoin that we see. This is what often happens when future markets are released for different asset classifications. You see less volatility because you see the option you give the option for traders to take the opposite side of the equation, essentially, by shorting Bitcoin. And I think it'll be interesting. I think institutional firms will only be, will be some people who short Bitcoin, but I also think this is really going to open up the doors for miners to short Bitcoin via futures. What miners have is a lot of uncertainty in the costs of their electricity, and when they're running, it takes power and electricity to mine Bitcoin. And what they can do, due to the uncertainty of Bitcoin each month and what price it will be, and whether or not they can afford their electricity costs and computational resources, is they can enter the futures market. And they could, for example, take 10% of their Bitcoin and bet against it, so that in the event that Bitcoin falls, they have basically collateral to rely on, and they will make out on this, Bitcoin's price falling. If the contrary happens and Bitcoin increases in value, they have that other 90%, and people they will have a little bit more certainty. So I think this will really do good things for miners and introduce a lot of miners into the Bitcoin futures market. I also wanted to show you this graph here as well, and just to show you guys one of the really basic, what do we call this, chart patterns that you can use to help recognize the price of Bitcoin. And I also want to talk about my opinions on what I think Bitcoin's price will do over the next couple of weeks and months. And let's start by talking about this chart real fast. So I drew this. This is called a falling wedge. This is one of the most recognizable patterns and the most accurate patterns in candlestick analysis or just charting in general. What a falling wedge is when you have lower and lower highs, as well as lower and lower lows. So I drew the top and the bottom right here. This would have been your first high, the second high right here, and the third high, all decreasing in price and hitting lower and lower highs. Same thing here for the lows. So there was a low, there was a low, and there was a low. And basically what this pattern is referred to as a falling wedge. It is the first sign, or it is a sign of reversal in the charts. And we did see this reversal here. We were able to break out of this, and we saw a little bump in price. Basically, these entire, if I bring this back out to the daily, back when Bitcoin futures were announced somewhere back here, Bitcoin's price has essentially tripled in value. Right now we sit at 15,000 almost, but we've almost doubled to tripled in value, and it's been an amazing run up. But of course there is a little certainty now. We have some downward pressure coming, and you can expect that downward pressure, especially as Bitcoin futures launch later tonight and this evening. I think what this will do, though, like I said, is the long-term impact for Bitcoin, I think, is very good. I think in my eyes, and I hate to say legitimacy because this really undermines a lot of what Bitcoin is as a technology and what it can do for the world, but a lot of people have been sitting on the sidelines not recognizing Bitcoin as a legitimate investment. And now with the release of Bitcoin futures, and I'm sure more things to come, such as ETFs, it becomes a legitimate option in the eyes of rich investors and people with a lot more money. And overall, I think will be a good thing for the market. Unfortunately, like I said, I hate to call it legitimacy, but a lot of people still don't believe in the validity of what Bitcoin is and does. And as an engineer, this is what had fascinated me the entire time: the technology of what Bitcoin is and what it can do for the world. So this is, no surprise to me that, here I am invested in Bitcoin, obviously, but it will open the doors, I think, to a lot of people, and it will do good. The price in the near term, I think you can expect to be extremely volatile. In fact, Bitcoin futures, the way that they had basically a bunch of people, and Andre Antonopoulos being one of them, had basically gotten together to decide on some of the criteria for which the Bitcoin futures will abide by. And one of the things they did is basically had to decide which exchanges they will be pulling the prices from. So one thing they did is they excluded all exchanges that don't continuously update the price of Bitcoin, because you need to have a price that does not fall out and affect the cumulative average. And additionally, they took out all exchanges and discluded exchanges that do not charge a fee, because what happens on a lot of exchanges without fees is that you have bots constantly trading, and what that does is it artificially affects the price of Bitcoin and what it is. So those two were excluded. Some of the other things that they designed were the 7% volatility rule. So whenever there is 7% volatility in Bitcoin's price in any one given day, the Bitcoin futures market will stop. And it's kind of funny because the Bitcoin futures was kind of created as a way of reducing some of this volatility, but make no mistake about it, Bitcoin futures will probably have to halt many times a day at 7% volatility. Right now, it is very typical. In fact, if we look at CryptoSomniac.com, we are just under 7% on the 24-hour. If I give this a refresh, let's check how much we are up on the actual day. We hit 7%, it feels like every other day now. So I'm sure we'll be halting the price, the Bitcoin futures betting quite a lot. Maybe my internet is being slow. I'm trying to refresh. Good news, actually, about the website. So the website is actually going to be updated. We are moving to Amazon Web Services, so it'll be a lot faster starting tomorrow and have a lot more features on it as well. So I'm super excited to get moved over. Maybe my website is just being glitchy, or my internet. Let's try coinmarketcap.com. So yeah, 6.87% on the day. Bitcoin is extremely volatile, of course. One of the other things about the Bitcoin futures, while we're at it, is that there are basically 2 points. They took what's called a reference point, which will be decided on. It's basically a cumulative average day in and day out that is calculated at the end of each day. It's a running average, essentially, for people to bet on. It's updated every day, once a day. The Chicago Mercantile Exchange we're talking about for Bitcoin futures. And then there's also a point price, which is the reference point, is the thing that's calculated the real-time, I totally messed up what I wanted to say. They have a real-time price here of Bitcoin that the exchanges agree on, that's updated. I think it's every 30 seconds, that people can unanimously agree on and be relative to or be accurate with pretty relative certainty. And like I said, they selected a bunch of exchanges to average that price, and they excluded ones that do not charge fees, as well as ones that do not continuously update their price. In addition to that, they also calculate a point price, which is calculated every day at 2 p.m. Central Time. And that is the average of the day, the previous day, up to that point in time. And it, again, is basically just a price that's continuously updated once a day and used as a reference point for people in the futures market to bet on. So that kind of explains what Bitcoin futures are. My opinion on the impact, I think there is going to be a lot of certainty, and I think we can have a lot of volume. Coupled with the release of Bitcoin futures, I also think just this time of year, the holiday season, has generally been pretty good to Bitcoin. And if we go to CoinMarketCap and just get a historical view of what Bitcoin has done over the years during the holidays, it's usually been pretty favorable. There is obviously, it's difficult to see with such a large increase in price these past several months, but dating back to last year, Bitcoin's price did very well through the end of the year. This is last year. We went up very quickly the end of last year. This is 2016 into 2017. Let's take a look at 2015 into 2016. And here we are again. So from the end of September to the beginning of March that following year, the end of the year had been very, very good to Bitcoin. I think it will be very similar again this year. I think that people will have time off during the holidays to learn about Bitcoin. My father, for example, is taking the time to get educated on what it is. He is not invested. I think people will have the time and opportunity at Thanksgiving, at the Christmas dinner table, during the holidays, at New Year's, to become educated and to learn how to invest from their other friends and family. So coupled with the release of Bitcoin futures, attracting and generating news in the market, as well as the time off during the holidays, I think this bodes well for the price of Bitcoin. And I would, I don't know who, like I said, I'm not going to be shorting Bitcoin using futures, but I think it does give the option and flexibility for large institutions and miners to basically hedge and mitigate risk. That's essentially what futures are. They are ways to, and that's what they are designed and created for. They are a way to mitigate risk. For example, miners and farmers are able to bet in the futures market as a way to hedge against their crops burning. And when all their crops burn down and the prices of, say, wheat or corn fall drastically, then the markets are forced to pay those prices out in those contracts that all get called when prices fall. So these are good things, I think, for the future of Bitcoin, and its impact, I think, will just help create legitimacy in the eyes of future investors, bigger players, and I think we will continue to see a lot of volume over the next couple of weeks and months. We are at extremely high levels as we are right now historically in Bitcoin, and I think this is a very good thing, and I think it was only a matter of time until this essentially happened, and I think it is just one small step for Bitcoin and one giant leap for cryptocurrency. So thank you guys all for watching. If there are any questions, let me open up some of the chats on some of the other channels. If you have anything, I am headed to the Eagles game actually later today. They play the Los Angeles Rams. If any of you know me, I was born and raised in Philadelphia, so I'm excited to see my home team later today play, and they're doing very well. Doing very well this year. I think we're number 2 or 3 in the league, something like that. I'm opening up your guys' chats above my head, and I'm going to take a moment or two to answer just a couple of your questions. If you guys have anything, please feel free to ask. I would love to answer anything and everything that comes through. So let's see. What do I think about Litecoin? Is Bitcoin futures based on a cash settlement? Okay, so Bitcoin, Litecoin, the first question from Brandon Elmer. Litecoin is basically like the silver to Bitcoin in my eyes, and I think everyone should hold a little bit of it. It is a great, it's usually, in my eyes, I see it a lot as like this test platform that's used to test things out on Bitcoin that happens later on to Bitcoin. For example, SegWit was tested on Litecoin and implemented prior to Bitcoin. And I think as people seek faster and better alternatives to Bitcoin, right now, Bitcoin, in my eyes, is really only able to be used as a storage of value. The fees are tremendously high. Additionally, it takes a long time for blocks to confirm. So it can't be really used right now to buy a sandwich or buy some coffee. It's very difficult to do that still. Litecoin, at least things are a little bit faster, and because the network is much smaller, it takes much less time to agree on adjusting different things in the protocol that it can help speed it up or change it or make it different or better. Right now with Bitcoin, things are very slow in that regard. Someone asks on YouTube, Ash asks about Coinbase, I believe. Your question is, I thought the cash was only FDIC insured, not NDA, not the coins. Also, they go down with too much volume. Same with Gemini. I have accounts in both and trust Gemini more. So I do not believe Gemini is insured. Coinbase is insured for $250,000 for both fiat and electronic or digital currency as well, not just fiat. I do not believe Gemini is. So it is, in my eyes, safe to store your money on Coinbase if you're a U.S. citizen. So they only insure it if you're a U.S. citizen. They do not insure it if you are not a U.S. citizen. Should crypto hodlers buy futures? In my opinion, I don't think so. I think there are a lot of other opportunities to make money, invest in other things. Like I said, this will help mitigate risk for a lot of other people that rely a lot on Bitcoin, like major institutions and firms and miners. I don't think your average cryptocurrency hodler holder will be interested a whole lot in futures. Me personally, I won't be investing in futures. Someone asked on Twitter, so if I am hacked, am I insured? So if your money is on Coinbase, yes, you are insured. Your money is insured if you are over on Coinbase and have your money there. You are insured if your money does get hacked or stolen. I want to take a look at the questions over on Facebook. It's derivatives. We don't need that garbage. Someone asked on Facebook. So yeah, like I said, you don't have to bet on Bitcoin futures. Why should a centralized cash-back and cash-paid derivative control decentralized multitutional assets? It won't have a direct effect. So again, futures is not a, you're not actually bidding on the price of a Bitcoin and you're not owning any of the underlying asset. And I don't think there will be any direct impact in the ultimate future of what Bitcoin is and what its function is as a currency and technology. We are not affecting that. We are not, we're not affecting that ultimately. Someone asked on YouTube, Milano, what about Ethereum Classic and its hard fork and its price action? So Ethereum Classic was created as a result of a hard fork. It is not a coin or a cryptocurrency that I tend to follow anymore. It used to be something I was invested in and kind of gave up on it a long time ago. A lot of times, anytime there's really a fork in a cryptocurrency, even like Bitcoin, and it'd be very interesting to see the futures of both those two cryptocurrencies. But anytime there is a fork in a cryptocurrency, one is really bound to die. I mean, it's kind of like an economy is stimulated by how much supply and demand there are, and if there is no demand, usually all that demand shifts to one chain. It kind of if one can do it, why do you really need the other one? It's kind of like basic economics that one would eventually die off over the other. And it'll be interesting to see with Bitcoin and Bitcoin Cash, which one is perceived as the true and real Bitcoin. And of course, similar thing happened into Ethereum and Ethereum Classic. There was a lot of debate upon why the fork. So the fork happened as a result of the DAO hack. Money was hacked in Ethereum prior, and what happened is they decided to fork to recover the funds, and it was viewed as controversial because it basically allowed Ethereum to do something that technically a decentralized asset should be unable to do, which is basically change what happened on chain. And, they forked and basically didn't have to as a result of that the hack, they were able to recover those funds by forking, and it was viewed as controversial. So the fork is not creating a new Ethereum Classic coin. It is limiting the total supply of Ethereum Classic. That's interesting. I have not followed the Ethereum Classic and what they're doing, but I am all in favor for when things get limited, limiting their coin supply. Stream Health Live. Am I still live on YouTube? Hopefully I am. Hopefully that did not drop out. Anyway, I am all for limited coin supply. I mean, that's kind of what gives Bitcoin a little value. It's limited cryptocurrency supply. There are only ever 21 million in supply ever to be mined. So that's kind of what gives it value. So I'm all in favor for when things get limited in supply. I am going to head out. I actually have to get headed out for the Eagles game. Like I said, the Eagles are playing the Los Angeles Rams here. And I'm actually kind of sick. Hopefully I didn't catch a cold while I was doing the 24-hour live stream yesterday. Feeling a little lousy. But I believe I'll be back. I think Snay is going to stream later tonight. And one thing I'd love for you guys to do is if you could comment. I think I put a poll over in the Facebook group. Just poll what you want to, what you'd like to see in the videos, what you would like us to make a video on. We want to take some time to just create content that you guys want to know about. This is our full-time job, so we have the time to spend and research. So if there's anything that you want to hear or have researched a certain coin, I think I'm working on a PowerPoint today. Actually, I haven't been able to find a lot of good information on it. And when Googling it and even searching for it on YouTube, I haven't found a whole lot. But Neo versus Ethereum and some of the differences. So I think it'll be a pretty good video. But if you guys have any questions, of course, leave them in the comment. Retweet this over on Twitter or share it over on the Facebook page for a chance to win some free cryptocurrency tomorrow. Or even later tonight, maybe when Snay gets on. So, thanks, guys. Thank you for watching, and I'll talk to you all later. Have a good rest of the day.